Okay, we are live. All right, so today we're going to talk about vaccination programs, vaccination rates, and their impact on job growth within the states in this country. Right. So um, let me start with the first article, the research that's been done. It's starting to become clear exactly what happens when vaccination rates go up or go down within the state and the impact it has on the change in job growth. So let me bring up the first study that we're going to discuss, and this one is from Mr. Michael J. Hicks, right? And it's labeled an opinion piece, but the truth is actually he's working with actual state level data. So I would call it analysis, not so much opinion, right? And the title kind of gives away the headline. The growth gap is widening at the expense of states with lower vaccination rates, right? Now, on a practical level, we might imagine that this is the case, right? If you have lower vaccination rates, you have more COVID cases, you have more businesses that are being restrictive or even shutting down. They have lower capacity to accommodate customers. Hospitals are being overwhelmed. So intuitively, we might say, well, yeah, I mean, the relationship between vaccination rates and job growth should be pretty positive. It's correlation, but it's good to have actual data, right? So if all you wanted to know was the the confirmation from scientific data that vaccinations are good for job growth, well, there you have it. You can click off and yeah, you got the yeah, you can skip the rest of the video. But if you want to see the actual data, you're curious about some of the nuances of what's actually happening in the states, stick with me and we'll go through the numbers. Okay. So with regards to uh, Michael J. Hicks, first let's take a quick look at his credentials. We need to know that he knows what he's talking about, right? So he is the George and Francis Ball Distinguished Professor of Economics and the director of the Center for Business and Economic Research at Ball State University. Um, and there you have his Twitter handle. So um, I looked at his article. It looks pretty credible. I think his analysis is very reasonable, bringing to bear what I personally know as an economist with regards to the data. So let's get into the meat of his analysis, right? And so the first thing that we need to discuss is something that we talked about before in the in my some of my previous streams, which is what happens when states cut off the extra $300 per month enhanced federal benefits, right? And the preliminary data that's coming in is that actually uh, that results in a reduction in job growth for that particular state. It might be counterintuitive because people were speculating that it's the extra payments that were preventing people from from doing job searches and going out and being aggressive about looking for a job because they're sitting on the couch at home, you know, just collecting their checks. But the empirical data shows that it's actually the opposite. So let's read into this text here, right? So he notes that from April to June, the 26 states which cut off the extra $300 during the summer grew at about 72% as fast as the rest of the economy, according to my calculations. The most charitable understanding of their policy decision was the hope that it would spur employment. Exactly like we were saying. It was going to get people to get off their butts, get off the couch, and aggressively start looking for jobs. But the data shows that's not exactly what happened, right? So from June to July, as all those states cut benefits, their job growth slowed substantially. From June to July, those states grew only 64% as quickly as those who left benefits intact, right? And so that might be puzzling for the public because intuitively you think, isn't there an incentive? If you're paying people extra money to basically sit at home, doesn't that mean that you're going to inhibit job growth, right? But consumer behavior and economic behavior is much more complex than that. So I've talked about this in some of my other streams, so go check that out in some of the streams that I did about the labor market, right? The labor market shortage. So, but pressing on, okay. He references a study published in August of this year. Um, and I think actually I talked about this banking data. Um, or I think it probably came from Bank of America. I discussed it in one of my streams, like I said. And what it's showing is that when the states cut on the enhanced unemployment benefits, number one, there wasn't a rebound in job creation, but more uh, importantly, right, what it shows is that when you look at the bank deposits of people who were receiving those unemployment benefits, not only did they not find jobs, but their savings were exhausted. Now, I just want to mention as a side, right? I have seen other research that confirms this, and basically, on an intuitive sense, this is what happens, right? It takes money to find a job. You got to pay for gas. You got to make sure you have a roof over your head. It's hard to look for a job when you're homeless. When you're filling out the application, it says, "Where do you live?" Right? You can't say, "I live on the streets." It's not a good look, right? You got to take care of yourself. You got to keep up your appearance. That might mean even dry cleaning your suit, um, or your business suit for women. So what research has found that it takes money to find a job, and when you've exhausted your savings, then you're in a tough spot. So that's really the causal effect of this. And so a lot of the people who might have expected, the job rates to go up in those states that cut benefits, actually saw them go down. And that's probably the reason why, right? And now let's get into um, the data about the further impact of COVID cases and vaccination rates, right? Because the reason why he's talking about this is because he's looking at the impact of job growth due to various factors. That includes, the enhanced federal unemployment benefits, and now he's also talking about vaccination rates, right? So going on to the text. From April to June, the 25 least vaccinated states saw job growth around 80% of that of the 25 most vaccinated states, right? And that was before the COVID variants started its resurgence, right? From June to July, those states saw employment growth drop to just 67% of that of the most vaccinated states. So according to the data that he has collated and analyzed, right? First, you have the impact of ending the federal benefits, which actually reduced job growth. And then you have lower vaccination rates, uh, the states with the bottom rates of vaccination, where you've got businesses under more restrictions. There's more fear. There's more uncertainty about people going out and spending money, going to the theater, going to restaurants. So it's really no surprise, certainly from the impact of COVID, right? I mean, we already knew this. When the pandemic hit, we had to lock down the whole country, right? And you saw what happened to employment. You saw what happened to the economy. Well, now this is happening piecemeal over the country. And I don't want to sound ghoulish, but for an economist, this is actually very interesting because we're able to study the differentials in data and saying, okay, we have this single factor that's impacting the whole country, but we're seeing differential effects and what's happening there, right? And so, the states with the lowest vaccination rates are only seeing growth, job growth, right, at a rate of 67% of the more vaccinated states, right? So that's the conclusion based on the analysis that he saw. But that's only one study, right? We need further confirmation because we are scientists and we look at data, okay? So there was another study that was done by Fitch Ratings, right? They're a rating agency. Um, I actually almost ended up working for them when I first got out of college. I remember I did an interview with them when I got out of Cornell, and I had no idea how to do interviews, and it was a nerve-wracking experience. I think I pretty much messed it up because, well, I didn't get a call back. But anyways, um, they did an analysis of job recovery in different sectors of the economy, and what they found was the leisure sector job recovery are really enhanced when you have highly vaccinated vaccination rates, right? So let's dig into the data right away. Okay. So this chart, I think, is pretty much self-explanatory, right? So this chart is basically showing state leisure and hospitality employment growth relative to the vaccination rates uh, per the population, but and so this is not per state. This is for the entire country. But you can see the differential here. The green right here line is the job growth for states that are in the highest quartile percentage of the population that's vaccinated, which is over 66%, right? And you see in the lowest quartile, less than 50% of the population has been vaccinated. So this analysis is done by Fitch Ratings. The data is from the Bureau of Labor Statistics. And once again, we see confirmation that higher vaccination rates leads to higher rates of job growth. And really, is it that much of a surprise? Of course not. It's just like we said. When there are more cases and people are scared to go out, people are scared to spend money. Obviously, that's going to reduce consumer consumer demand, and consumer demand will directly reflect on job growth because businesses are not going to hire if they see that the demand for the goods and services are actually going lower, not higher, right? Now, there's further data from this study, which basically looks at the same kind of data, but this is again, now this is broken down by states, right? So the title, basically laying it out, states with higher vaccination rates have stronger leisure and hospitality sector employment growth. Okay, so if we were to look at this chart to make sense of this, right? Um, on the y-axis, we have percentage of population vaccinated, and on the x-axis, um, this is the percent of job growth within leisure and hospitality. And here, uh, Vermont, sorry, Vermont has the highest. Massachusetts, Vermont has the highest levels of vaccination uh, rates, per population, and they also have the strongest job growth there. And once again, you know, um, we can see that, especially for leisure and hospitality, where you are expected to meet your customers, you have face-to-face contact, you have first social interaction with customers, right? That would be especially impacted by any rise in COVID cases, and consequently, would be greatly helped by vaccination rates because now you're less fearful. There needs to be less restrictions on businesses because the vaccination rates are higher. I know that most of the states are determining rules about restrictions and social distancing based on COVID cases and what's happening with their hospitals. So you know, if cases are down, if the hospital system is not being overwhelmed, obviously they feel a little bit better about loosening the restrictions on businesses, and that's got to be good for business income. Okay, so here we see in this study, right, that specific to leisure and hospitality, right, it confirms that vaccination rates are positively correlated with state level job growth, right? So let's move on to um, the other study that was done. And here again, um, this is specifically done to track small business employment growth. It's from a consulting company called Gusto. They're a data platform. They're a data company. Um, and so looking at figure one, let's make sense of this. Okay, percentage change in headcount and percentage change in new daily cases. By percentage change in headcount, they're really talking about employment growth, job growth, right? Excuse me. And it's interesting to note that this is specifically related to small business employment, right? Because there has always been a great fear that the pandemic has hit small businesses especially hard. There was the paycheck protection program and all those kinds of things to help out small businesses. And so let's look at the data. You know, um, so uh, you know, um, you know, it's basically what you expect. I don't want to belabor the point, but the percentage change um, in in job growth really has to do with how fast percentage cases are actually dropping, right? Um, Small businesses benefit when the surrounding area has higher vaccination rates. Um, so you know, so basically, if you look at this, this is percentage change in daily cases. If the cases go up, right? You see, as the cases go up, the percentage change in headcount starts to go down. That's why you have this kind of you know um, inverse relationship, right? So, and this is vaccination rates and service sector small business employment growth. So again, percentage change in headcount. So as as your share of adults that are fully vaccinated goes up, percentage change in headcount, percentage change in job growth is positive, right? So overall, pretty much what we expected, but it's good to get objective scientific data to confirm our intuition. So there you have it. So what does that mean for the economy at this rate? Well, what we can say is that right now, the best stimulus program for the economy is vaccination, right? If you want your state, if you want your city to increase in economic growth, it wants to increase in job growth, right? Vaccines are pretty much the most impactful way of seeing that go up, right? So, um, I don't want to get into all the politics and all that, and no matter how you might feel about vaccines, but the data, the vaccination rates and the employment data is pretty clear. It's a very strong positive correlation. So vaccines are good for the economy. When vaccination rates go up, employment growth grows up, and that gives you a clue as to what's going to happen in the economy for the rest of the year and likely into next year, which is, right now we've got the COVID variants having a resurgence. And so without an increase in vaccination rates, without possibly the booster shots or maybe reformulated vaccines to take on the new variants, right? We might see slower growth. There's a lot of uncertainty in the economy right now, right? There is, just because we don't know what's going to happen with the Delta variant. Do we get it under control? Is there going to be a resurgence? Is there going to be a new variant? Right? So the things to watch out for is exactly that. How is the Delta variant doing in terms of spreading throughout this country? Is there a new variant coming up? If that's the case, then we're going to face challenging economic times for next year. Anyway, so I hope you found that helpful, and I will